Hey guys, I'm recording this urgently, completely off schedule. Why? Because over the last couple of days the market crashed so hard that waiting until Friday's video is just not an option. Last Friday I told you one simple thing: ignore the price of Bitcoin, watch the headlines about iron. That's where the pivot is. Well, it hasn't even been a week and the headline just dropped, and it's bad as it gets. Iron has suspended peace talks with the US. After that everything went straight to hell in literally 24 hours. $1.3 billion in liquidations and Bitcoin dumped below 67. Remember when I said 73 was the line where the sell-off starts? They smashed right through it and dropped straight to our exact target, 66,500. That's exactly why I didn't wait for the regular episode. Right now we are gonna break down exactly what happened over 48 hours and, most importantly, what you need to do right now. Let's go. You already know the big macro picture. I broke it down in detail on Friday. Long story short. The war in the Gulf is keeping oil prices high. US inflation is at 3.8. It's high. And because of that, the Fed can cut rates. The new chairman, Warsh, has his first meeting on June 16th and 17th, and he is totally backed into a corner. There will be no cheap money. The oxygen for risk assets is cut off. That's the baseline, and nothing has changed here. But here's what did break over the last 2 days. The one hope holding this entire market together was that a deal with iron would happen. Oil would drop and the Fed's hands would be untied. That hope just popped. Iron slammed the door and paused the talks, and the market, which was hanging by a thread anyway, just nosedived. By the way, whenever urgent stuff like this happens, I post it on my X first, even before I hit record. I also drop a weekly calendar there, so you know exactly when the data comes out and when you should stay away from trading. Link is in the description, go join. Now, here what we didn't see coming on Friday. On top of the bad news from iron, the market took 3 massive hits in a single day. Hit number 1, the Mt. Gox drama. The exchange that died way back in 2014 just woke up for the first time in 6 months and moved over 10,000 bitcoins worth about $739 million. Honestly, it's probably just a technical transfer between wallets to pay back creditors. The coins haven't hit exchanges yet, but the market doesn't care about the details. It seems Mt. Gox moving Bitcoin and is instantly panics. Last time this happened, the price dumped 15% in a few days. This ghost doesn't even need to sell to scare you, it just have to move. Hit number 2, and this one is symbolic. Sailor. MicroStrategy is a company that spent years teaching everyone to never sell your Bitcoin, just went ahead and sold for the first time in almost 4 years. It was just 32 coins, absolute nothing compared to 840,000 on their balance sheet. But it's not about the money. The ultimate hodl forever preacher blinked and the market felt it instantly. Hit number 3, the heaviest one financially. Funds. In just the last week, nearly $1.5 billion was pulled out of Bitcoin ETFs. That's a record for the whole year. 3 straight weeks of money flowing out. The same institutional players who pumped the price up now quietly dumping. Put all of this into a 2-day window. Bad news from iron, Mt. Gox, Sailor, record outflows. Any of these alone is whatever, but together on thin summer liquidity, that's exact how you get 150,000 liquidations and a broken support line. If all these puzzle pieces just clicked for you and you finally see why the market crashed right now, hit the like button. It's literally the only thing that pushes the video into an algorithm, and it gives me a reason to make these urgent updates instead of staying quiet. Thank you. Let's get down to business. Let's talk levels. The picture is simple and honest. Bitcoin broke the uptrend channel that started from the February lows and fell below all the key moving averages. Structurally, the bears are in the control right now. Pretending otherwise is just stupid. Looking up, to give us even a little room to breathe, we need to reclaim the 71.5, 72.5 zone. Above that, see the yellow band, the liquidation map around 75. That's a magnet. The market will pull toward it if we get a bounce. Looking down, 67 is already broken, below that is 64. But the level worth holding cash for is 60k, right next to the 200-week moving average at around 61. In past bear markets, this exact zone was often the ultimate bottom. That's exactly where I'm looking to start buying. So what is my plan? Extreme fear is in the market. The index is at 23. Buying when everyone is terrified usually pays off in the long run. But buying the fear and catching a falling knife with leverage are two totally different sports. And the second one ends you with losing your money. That's why I'm not going all in at one price. I'm dollar cost averaging into the 64 to 60 zone. I'm keeping some cash on the side and I'm not touching long leverage right now. And I already know my exit plan. If the weekly candle closes below 60, I won't fight the market. I'll rethink everything. Here's a quick tip on these levels. I don't sit staring at the charts 24/7. I set limit orders in these zones in advance and I go live my life. It feels on its own. I do this on Bybit. If you don't have an exchange yet or you are using some leggy platform, check the link below. You get a bonus as a new user plus lower fees. It's the exact same exchange I trade on. Now for some good news and a quick test to see if you actually watched the last video. Remember XLM? On Friday I pointed out it was up 30-something% on the DTCC news. Since then it just kept accelerating and hit another plus 40% and at its peak. The logic here is rock solid. When the whole market is bleeding red, money doesn't just vanish, it flows into the few projects with real utility. DTCC processes 10 to 20 trillion dollars in trades every single day in the US, and they are bringing real securities onto the Stellar blockchain. This is RWA, real world assets in crypto, and that is exactly where the smart money is moving right now. But listen closely, XLM is completely overbought at these levels. Jumping in right now means you are just buying the top from the guys who got in a week ago. And those massive green numbers on the screenshot plus 400% plus 150% on random small caps, don't even touch them. The rule is simple. If you don't understand why a coin is pumping, it means they are dumping their bags on you. You are just exiting liquidity for someone else's profit. I'm actually curious. Drop a comment. Which camp you are in right now? Are you buying the fear step by step or are you sitting in cash waiting for Bitcoin to hit 60? Also let me know which coin I should analyze next. I read the comments and pick topics straight from there. Let's wrap this all into one master plan. This whole week is about US data and it's already rolling on. Yesterday's job openings report showed an increase to 7.6 million. Sounds like a good news, right? But for us it's actually bad. A strong job market means the Fed has zero reason to cut rates. So the fresh data is pushing the market down even harder. Today we get ADP employment and the services PMI, and Friday is a massive jobs report. Then inflation on the 10th and the Fed meeting on the 16th and 17th. Plus, in the background, we have the massive SpaceX IPO at almost 2 trillion. It's going to suck all the money and attention away from risk assets, including crypto. So what am I doing? I'm not trying to be a hero and neither should you. I'm holding a chunk in cash. That's not being scared, that is a strategy. The levels are set. Buying Bitcoin at 60 to 64, looking for a bounce to 71.5, 74, 75 maybe. I'm not using leverage for longs or shorts, and here's why shorting is dangerous right now. One single rumor about a ceasefire with Iran and the market rockets up 10-15% overnight, liquidating every single short. The risk goes both ways right now, keep that in mind. What should you watch first? Headlines about Iran. If tensions drop, the market will instantly breathe and bounce. And watch the ETF's flows. As soon as the red outflows turn into green inflows, that will be the first honest signal that bottom is close. So in total, for the last 44 hours, the hope for an Iran deal is dead. Empty Gox and seller threw the fuel on the fire, and the 73 line broke, and we are sitting in extreme fear. You can make money off this, but only if you keep a cool head, buy step by step and stay away from leverage. This was an emergency update. Hit subscribe so you don't miss my next videos, and drop a like if this was helpful. My X is linked below and in the description for real-time updates. Protect your capital. That's all I got for you today. See ya!